Hey everyone, Paul Clark here, and in this video I want to do a deep dive into Ford stock. So when we think about Ford, this is a company that, compared to their all-time high that they were trading at back in 1999, back when they were over $37 a share, well, their share price has actually fallen about 80% since that time frame. So this stock has been under a lot of pressure. They haven't had a lot of things going right for them. But on the flip side, when you look at what the share price has done lately, even though for the last year they're down about 16%, and on a year-to-date basis they're down by 18%. Since the March lows, back when they were trading March 2020, back around $4 a share, they've about doubled since that time. So they went from about $4 to most recently closing October 16th at $7.67. So again, they've had a lot of success in the last 6 months. I know a lot of recovery stocks have had success and have certainly seen a lot of momentum in their share price. That's not true for all stocks, but with that in mind, again, I wanted to kind of use that as a launch point to say, okay, what's been driving Ford stock higher since the March lows, and what could investors potentially have to look forward to? Because, I think from a lot of perspectives, when you kind of look at the sales that Ford generates and the business that they generate, you could really kind of make an argument that they're pretty undervalued. One of the problems with that is that you could have made that argument for a lot of years in the past and it didn't necessarily come to fruition. So what's different about it now? Why am I more optimistic about Ford stock? Well, let's get into it. And to start out, to put things in perspective here, I want to actually kind of go ahead and do just a quick overview. I want to take a look at 2019 full year data, and I want to kind of give you, for comparison's sake, I want to show you, Ford's revenues and net income and year-over-year trends compared to General Motors, compared to Tesla, and even to Nikola Motors, just to kind of show you, again, the relative size to those competitors. So let's go ahead and pull that up now. Okay, so again, this is full year 2019 financial data. So kind of the metrics we're going to be looking at. First, we're going to be looking at annual revenue. I'm also going to be looking at a percent of Ford revenue. So in this case, I'm saying, okay, if Ford's 100%, let's index General Motors, Tesla, and Nikola to Ford and kind of see their relative size in terms of sales. We can take a look at net income on a normalized basis, the total assets that they have, long-term debt they have on the balance sheet, as well as year-over-year trends in terms of revenue growth and their normalized net income. And then finally, you can kind of get a sense here of how many shares they have outstanding as well. So from the revenue perspective, you can see that Ford, they had just shy of $156 billion in revenue. That is certainly a pretty substantial number. And that compares with General Motors. They clocked in at over $137 billion. But that was about 12% less in sales than what Ford was able to book in 2019. And then, of course, the ever-popular growth stock Tesla, they were able to eclipse $24 billion. They had about over $24.5 billion in annual revenue in 2019. And then finally, looking at Nikola here, they had less than $1 billion in revenue. So when you kind of index that compared to Ford, they essentially were at 0%. I think you would actually need to expand that out for Nikola out to maybe 4 or 5 decimal places for that to actually register as a non-zero number. So certainly pretty small at this point in time. And then when we look at net income, now net income Ford actually, we can kind of see on a year-over-year basis, their net income was basically cut in half. So even though it was cut in half, we can kind of say on the positive, at least for 2019, they certainly were booking, a positive net income, or they actually were showing a gain, or not a gain, but they're above zero, which certainly is not the case for Tesla or for Nikola. And then we look at General Motors, and they were able to actually, hold up pretty well, even though on a year-over-year basis, they actually lost about a quarter of their net income. So they still were able to clock in at over $4.7 billion in net income. So there you go. There's just kind of just a quick layout. Again, I wanted to put this into context because, I think for some investors out there that are investing in companies like Nikola and Tesla, I don't think they always necessarily understand that, their sales are as small as a fraction of Ford and General Motors and some of the other big established automakers. Now, that being said, their valuation and their excitement stems from their growth potential. Okay, so they certainly could eclipse Ford and GM one day. In terms of revenue, right? But at the same time, it's where we stand today. And so when we again talk about, the share price decline in Ford since 1999, why has Ford been under pressure, or why have they not necessarily been as successful? Well, when we look at Ford, there was definitely a time when, after the point where, you go back when gas was over $4 a gallon, there was a big shift to want to be producing, smaller cars, focusing on fuel efficiency, moving away from bigger SUVs, things of that nature. And I think Ford kind of overcorrected towards that market. And when you also look at it, Ford, even going back to 2007, they were building out cars that had, the frames or the bodies that were kind of had commonalities, between 27 different cars or vehicles they were producing. And they've dropped that down most recently to 5. And, so from what that's able to do going forward is if you have more vehicles that have, frames and, kind of the components in common, you're able to be much more flexible about shifting in demand based on market trends, or if one vehicle is doing better than another, you can kind of shift some of those resources quickly towards that market demand. So I think that, they weren't quite as nimble in the past. And again, they were kind of, for part of that reason, they were slow to responding to lower gas prices. So that's part of the reason that Ford stock has kind of been beaten up. And certainly I think that, they've been behind the 8 ball here when it comes to electric vehicles. So when you think about, the excitement of a Tesla, they certainly have kind of overshadowed, a lot of the investment in automakers. But what's kind of my take on this on a go-forward basis? So if we talk about some of the problems that they have had, so for me, I think that this company, Ford has shown that, they've been able to generate some pretty good year-over-year growth in 2020 with their F-150 vehicle. And, in the most recent quarter, they were up over 3% for F-150. And I think that's really meaningful. So when you look back in the last 43 years, the F-150 has been the best-selling and the highest-rated, full-size pickup. So the fact that Ford's still able to kind of maintain that dominance, and they're actually coming out with a reboot for the F-150 as well, kind of some updates to that. I think that that's something that in the short term is going to help buoy this stock. And then I think, past that, kind of in the medium term, I think that they have some exciting initiatives in place for electric vehicles, some exciting initiatives in place for new product launches, like the Bronco expected to come out in 2021. So again, I think that this is a stock, the F-150 is going to help stabilize this company, the success they've recently had with that, and that's going to help them transition to their strategy to invest more and roll out more electric vehicles, new product launches. So I think that, with all of that in mind, I definitely see a path for Ford kind of getting back to growth and profitable growth. So I think that's pretty exciting. And speaking of, coming out with electric vehicles and speaking about coming up with new products, let's walk through a couple of them right now. So the first one up is going to be the Mustang Mach-E. And this is a really exciting looking car. I'll be honest, I'm not really a car guy, okay? I feel totally fine driving an older car. At the same time, looking at some of the reviews, some of the, the pictures of this thing and seeing it, it makes me think that, hey, this would be a really cool car to have. And with that in mind, I wanted to get into a quote from the executive chairman at Ford, Bill Ford, who of course is the great-grandson of Henry Ford, okay? So, still strong ties, family ties with the Ford company. But this is what he had to say about the Mustang Mach-E. He said, "I said if any car is going to wear the pony, it can't just look like a Mustang. It's got to drive like one, it's got to feel like one, and have the soul like one. I've driven it, and it's like a rocket ship." Okay, so I love that quote. I love him talking about, the value of the brand, about saying, hey, we're not going to just put the Mustang logo on anything. We have to believe, in the car that's coming out with that. And so the fact that, you have Bill Ford saying great things about this, the fact that it looks exciting, the fact that I think that a lot of customers out there, that there is a demand for this. I think this will bring new customers to Ford, and I think certainly if they have success with that vehicle, I think that it's ultimately going to kind of be a springboard to kind of further gain market share for other cars that they could roll out in this space. Now, the other kind of exciting thing about this Mustang Mach-E, and let's take a look at this, is that, Ford is really trying to position this to be a competitor to Tesla. So if they're positioning it to be a competitor to Tesla, let's actually take a look at some of the specs to see, how it actually stands up, or at least how it's rated by Ford compared to like what a comparable Tesla can do. So once again, let's go ahead and take a look at that table. So Ford is, again, positioning to this to be a competitor with Tesla, specifically for their Model Y vehicle. So if we look at the Model Y and we look at the battery range, and we're going to be comparing it here to the Ford Mustang Mach-E Select and then their premium version of the vehicle. So Tesla, for their Model Y, their battery range is over 300 miles. Kind of the more basic Mach-E is going to be in the 230 mile range. It's also going to have rear-wheel drive, whereas the premium is going to be able to get you about 270 miles. So again, pretty close to the 300, but not quite as far as what your Tesla is going to get you. And that one's going to be all-wheel drive. When we look at it from a passenger perspective, all three are going to be able to have 5 passengers. So kind of no benefit for either one from there. When we look at the ability to be self-driving, the Tesla Model Y currently has that functionality. Ford is currently working, on the ability to have that upgrade. They're currently forecasting that's going to be in the second half of 2021, but because it doesn't exist yet, and we know that with these new technologies, there's always the risk of setbacks. So that's certainly a downside if that is a thing that you're looking for. Tesla has it now. Both have wireless phone charging. I feel like that's going to be pretty standard for a lot of premium cars going forward. You look at Android Auto and the Apple CarPlay support. Ford's going to have that. Tesla doesn't. In terms of the acceleration performance, you're going to be looking at from a 0 to 60. The premium Ford Mach-E and the Tesla Model Y, both clock in at 4.8 seconds. So really strong performance from both of those. So you could say it's pretty close to a tie. Although I think it'd be pretty fun to see a race with those particular vehicles. And then in terms of when they're available, of course, the Model Y is available now, whereas the Ford Mustang is going to be available in late 2020. And finally, we come down to price here. So when we talk about price, the Tesla Model Y is going to be priced right just below $50,000. At the same time, the basic Mach-E for Ford is going to be coming in at $43,000, and the premium Mach-E is going to come in at $54,700. But even though the sticker price for actually both of the Fords, or the premium rather, is actually more expensive than the Tesla Model Y, something to consider there is that Tesla is actually no longer eligible for their $7,500 tax credit. So that was a government program put in place that said that makers of electric vehicles, to incentivize that production, that they could offer a $7,500 tax credit for them, but only for the first 200,000 vehicles that were made. Well, Tesla actually finally got to that point in 2019 where they were no longer eligible to be giving out the $7,500 federal rebate. Ford, on the other hand, they've sold less than 200,000 cars, electric cars rather. And because of that, they are still eligible for you to be able to get that tax credit. So something to keep in mind with that too is that, yeah, the tax credit's $7,500, but to actually get the tax credit for $7,500, you need to be you need to be earning at least, I think, $54,000 a year to be able to really qualify for that. So basically, if you're going to be able to save, tax money that you're giving to the government, you need to first make sure that you're making enough to even be qualified to save that much. Okay, so just something to keep in mind. But on the flip side, I think that if you're making below $55,000 or $54,000, you probably shouldn't be in the market for a brand new Ford electric Mach-E anyway. At least not if you listen to Dave Ramsey, but hey, do what you need to do. Okay, so we covered the excitement around the Mustang Mach-E. So there's also a lot of excitement at Ford around their re-release of the Bronco. So when you look at the Bronco, this is a product that Ford actually was producing from 1965 to 1996, so a 31-year period where they were producing that. And part of the reason it was discontinued, so that was designed originally back then as solely a two-door vehicle. And I really don't think the market was really satisfied with just a two-door option. And so when you look at, Jeep and you look at some other off-road vehicles, they've had more success with the four-door variants. So with the 2021 release of this Bronco, with this update, they're going to be offering a two-door as well as a four-door variant. And they're hoping that that's going to be something they're going to get more traction with. So it is, monumental to think about this, that Ford is going to be re-entering the off-road segment for the first time in 25 years. Certainly looking to have more success for that the second time around than the first time around. When you look at some of the expectations for the profitability for the Bronco, this is a vehicle line that the company is expecting, or analysts, I should say, are expecting to generate about $1 billion in pre-tax profit that's going to be going to their bottom line. And from a potential profit per vehicle, they're looking at about $7,500 in profit per Bronco that they're able to sell. As far as the starting price, the range for this is really going to be between $30,000 and $60,000, depending on how fancy you want to go, how many variants you want to have, or options you want to have with this vehicle. So you want to go top of the line, you're going to be looking at spending as much as $60,000. But if you want your basic, just get you out the door, no frills experience with the Bronco, you're going to be looking at about $30,000. Now let's talk about the C-suite. So there have been some pretty big management shakeups. They actually have a new CEO that's been installed as of October 1st, 2020. And it was trading one Jim for another. So they had Jim Hackett as their CEO, and now they have replaced him with Jim Farley. And when you look at Jim Farley, he's a guy that's actually been in the auto industry for most of his career. So I feel like he has a better perspective on Ford's future than what the previous Jim had. The previous Jim came over from a furniture company, specifically Steelcase. And, I understand that you can certainly cross industries from a leadership perspective and have success. I don't really think that that was the case in Jim Hackett's particular situation. So there's certainly reason to be optimistic about that. And then along with that shakeup, they actually had their CFO announce that he was leaving in his place. And he was only actually with Ford for a year and a half. And you look at who they're replacing him with. They're replacing him with a Ford insider, John Lawler, who has 30 years of experience with the Ford Motor Company. So certainly, he knows the inner workings of this company. And quite honestly, I think that this is a move that, could be better for them to have that experience. And certainly from, equity analysts out there, they've been more optimistic that with him as a CFO, they might get a little bit more transparency. Because with the previous CFO that just departed, he wasn't necessarily as forthcoming as what analysts were always looking for in terms of kind of getting into some of the details about, getting out of certain programs or guidance on certain things. So again, I think that analysts are excited for this change. I think that there's a big reason to be excited with the CEO. Your main guy there who actually has a very rich history in the auto industry. And he's also a guy that when you look at it, I think he's really ready to kind of go in and, he's expressed a clear desire to invest in growth segments within the company, and he wants to turn around the automotive operations, allocate capital to Ford's strongest franchises and high growth opportunities, and produce compelling, uniquely Ford electric vehicles at scale. Okay, so that's kind of his mission coming in. I feel like I can buy into that, right? So then again, it sounds like analysts are, and so far it seems like the market's responding to that pretty favorably as well. From a valuation standpoint, so we kind of already talked about some of the historical performance of this stock. Certainly over longer periods of time, this has not been any kind of clear winner. We've seen a lot of shareholder value diluted with Ford. That being said, they're currently trading at $7.67, and they're trading at a really kind of low valuation in terms of like what their growth expectations could be. Part of that reason is their dividend was cut. So if you actually look at their dividend cost in total to the company, it was about $2.4 billion they were spending on an annual basis to be able to satisfy that dividend payout. And with the early events of 2020, they decided that it would be prudent to stop the dividend payment. And, on a per share basis, they were actually paying out 60 cents a year in dividend payments. And when you currently look at that, if you were to divide that 60 cents per share by the 767, they'd be coming in just under an 8% dividend yield. So I think even back then, you kind of had a little reason to be, a little cautious in terms of if that dividend was sustainable. And then, of course, 2020 starts out the way it did and basically said, hey, look, it wasn't. They had to pull that back. But if they were able to reinstate the 60 cents going forward on today's cost basis, you'd be getting close to an 8% dividend yield. Okay, and that certainly would be great if they'd be able to go back and do that. When you look at Ford's dividend history, so since they emerged from the financial crisis, since 2012, they were actually consistently paying an annual dividend to shareholders. So, just like they kind of had the hiccup in 2008, 2009, once they were able to kind of regain their strength, they returned back to rewarding shareholders. I think we're going to be in a similar situation, especially if they have success with their new product launches, the Mustang Mach-E, the Bronco. Those things go well. I think they will be rewarding shareholders with some dividend payments in the future here. And analysts are starting to come out more bullish on this stock. There was an analyst who actually just came out with a price target of $10 for Ford. Even a lot of the analysts that I think are a little bit more pessimistic have a valuation of around $8 for a fair value. So even some of the more pessimistic, analysts covering this stock are saying, hey, even at the current value, you're basically getting a fair value. So I think that helps mitigate some of the risk, because I really think Ford's positioned where they can participate in a lot of the upside, and that as long as they can have kind of their core products sustain their business in the next few years, I don't think you're looking at a huge risk to the downside. So I think that's a very positive for Ford as well. And again, when you think about the $10 price target, if they were able to achieve that at the current stock price, that would imply about a 30% increase from where they currently are. A pretty good return, again, if they're able to hit that. And that analyst specifically that had the $10 price target, let's talk about why they liked it. So they were really bullish on the management changes. They thought that was going to be a net positive for Ford, as well as the new product momentum, so that we've been talking about, as well as the benefits and the cost improvement. And again, part of that cost improvement, when you look at the common platforms from, going from the 27 down to 5, the fact that that's going to be able to save them a lot of money. Okay, so that's a little recap about what's going on with Ford, talking about, again, we covered the management update, we covered the new product launch, we covered, kind of the size of the company relative to some competitors. And, I've got to say that after doing all this research and kind of putting in the time to learn more about Ford, I feel like this is something that I want to actually buy stock in going forward. I don't actually currently own any Ford stock, but again, I feel like there is, for me, I think that they absolutely will generate excitement with the Mustang Mach-E. I also think you're at a point now that, they haven't got a huge amount of publicity on the Ford Mustang Mach-E. And I think that, certainly if there's, a positive response from consumers and that starts getting covered more by mainstream media, I think you could actually see a boost in Ford stock as a result of that. So I think that could certainly be a positive catalyst. It's certainly the more publicity you get for good news going on with the company, the better opportunity you have for your share price to appreciate. So that's what I think about Ford stock. And again, we walked through this together. So I would love to know what you're thinking about this stock. Is this something that you already own? Do you own it? Are you looking to add to it? Are you looking to buy it and you don't currently have any positions? Do you think that I'm completely foolish to be buying into kind of the positive momentum from some of their new product launches? Do you think Tesla's just going to completely steamroll them? I want to know what you guys are thinking about this. So let me know in the comments below. But thank you for watching.